How to trade using only one instrument. Hello guys, this is M5 Trading, and in today's video I'll show you how you can trade using only one instrument, and that instrument is named orderflow. Actually, I recorded that video a couple months ago, but then I treated orderflow a bit different than I treat that now. The first change that I made in my trading strategy is that when I traded orderflow a couple months ago, I treated orderflow as a tendential movement that takes out all the liquidity that's left behind. But now I treat orderflow as a structured movement that takes out all the liquidity that's left behind. That allows me to put my invalidation points, and for me it's like more simple to put my invalidation points that way, because now my invalidation is last low that took out liquidity and that made the break of structure. And also it's a lot more simple and it's a lot more safe to put your invalidation that way. Second change in my trading strategy is that before I could, if I had like order flow, I could take only continuation trades in that order flow. Now if I have an order flow, I can take continuation trades and also I can take reversal trades. With continuation trades, it's simple. When I have an order flow and this order flow has a target, for example it's here, then first option for entering that position is just by putting stop loss behind my invalidation and by putting my entry by risk to reward and by targeting high of an order flow or targeting that higher time frame target. If I want to take a reversal trade, I need to have specific conditions for that, because for a reversal trade I want to see an obvious target. So if I see that price is moving at order flow, but right now it's building liquidity and building a compression, then I would like to take a continuation reversal trade from significant liquidity pool like previous daily high, for example. Now about entry models. For reversal trades I have two entry models. First entry model is regular manipulation. Second entry model is market structure shift. Like you can see that price goes higher, then it starts doing a correction, and from that correction it doesn't go higher, it doesn't have enough power to do another break of structure, it goes lower from that, and if you see break of structure here, then that's market structure shift. If I trade market structure shift, sometimes I put my stop loss behind that high and sometimes I put that behind this high. It depends on the shift, because sometimes if it's like structure shift like here, then I will put my stop loss behind first high. If it's if that second break of structure, not second, like if this break of structure is like a manipulation, if it took out the liquidity, then I can put my stop loss behind that high. Basically that's it. That's all my logic that I use trading order flow. Now let's see some examples. Let's check out chart of the GBPUSD. So here you can see that GBPUSD was moving at long order flow. It took out liquidity here, it took out liquidity here, it made break of structure, another one, it took out liquidity, made break of structure, and this point will be our invalidation. And from that point it would be logical for price to go higher. And as you can see, price went for a rebalance. In that rebalance, from that manipulation you could also take a short position. From that rebalance it went higher. Now our invalidation is here. It makes a manipulation, it goes for a rebalance, takes out the liquidity, rebalances fair value gaps, makes a manipulation, and from that manipulation also you could take long positions easily. And then it invalidates our long order flow, so here it would be stop loss. But order flow is not holy grail, it's just regular instrument, but it's very good instrument and it has like a very high probability. From here you can see that price starts creating a new order flow, short order flow. It makes a manipulation. From that manipulation it makes another manipulation, like it takes out liquidity, rebalances fair value gaps, makes break of structure. From that break of structure, from test of that point of interest, easily you could take short position. Here price also does a manipulation, the 1 hour time frame. It's a manipulation from what you could easily take a rebalance trade. Then it validated the short order flow and it started growing. Let's see another examples. Let's see examples on gold. Here we also can see that price moves at long order flow. Here from that manipulation easily you could take a long position. Here also like it does break of structure, and now our invalidation is here because that's the last low that took out the liquidity and that made break of structure. So from that point of interest in that area we are interested in long positions, and here was a possibility to take a long position. And then price took out that significant liquidity pool. It made a manipulation on the 1 hour time frame. We can say that it started forming short order flow. Here basically we have two options. It depends on what market will show us. First option is that it will start making a rebalance and it will make a manipulation here, and from that manipulation basically when we can start working at short context before it will get invalidated. And second option is that we will make a manipulation, and from that manipulation basically we can go higher, because globally we are in long bias, as you can see. Basically that's it. Like if you have some questions you can freely ask us. You can DM us in Instagram, you can write in our Telegram. We will answer on all your questions. That was it. Thank you for watching and see you in the next videos.